Bitcoin is crashing once again. And as usual, we ask the question, does it make sense to buy this current dip? In order to answer this, we've got several interesting charts here. Those come from the Glassnode newsletter, the Glassnode Insights newsletter. Link is also in the video description. And at the end of this video, we are also going to look at a backtest as a simulation of buying and selling according to the super trend indicator. So you might have seen that before. We are currently bearish on that super trend indicator. So I've done a backtest trying to figure out, does it make sense to use it on the daily chart of Bitcoin? So there's a lot of information to cover here. So let's jump right in. Hi, so crypto is going down again, right? It's not just Bitcoin, it's all of crypto. Bitcoin went down since the 29th of March by approximately 17%. Ethereum went down by 16%. And Total 3, which is a measure of the altcoins, so Total 3 market cap minus the stablecoin market cap went down by more than 20%. That's, by the way, no surprise, right? There is some kind of inherent leverage in altcoins. When all of crypto is going up, the altcoins tend to go up even more. When Bitcoin or Ethereum is going down, the altcoins tend to go down more. And this is what we are currently seeing here. Now let's zoom out a little bit and let's look at the long-term development of Bitcoin. Let's look at the on-chain data. So these charts come from the Glassnode newsletter. And over here, we're starting off with the number of active entities, or a 14-day moving average of that. Now, what's an active entity? It's an adjusted measure of active wallets. So this is not just pure wallets. This is some kind of aggregation measure. So Glassnode tries to find out what kind of wallets belong together to one entity. And this is a pretty long-term chart, right? So it starts in July 2015 and goes all the way to today. So we've got our 15 to 17 rally over here, and then the crypto winter in 2018, where we went from 20K in Bitcoin all the way down to 3.5K. Now, the first interesting thing to note here is that the number of active entities, while having a lot of volatility, does trend upwards over time over the years, right? So there's more and more adoption happening. More and more people tend to use Bitcoin, but it does come in waves. This peak over here is at more than 350K entities. This then more than halved to 150 entities during this crash. Currently, we are relatively low, but increasing with time, which is positive, right? You want to rather sell when this is very heated, when a lot of attention is on Bitcoin, and you want to be buying when this is rather low. Now, this is by no means a perfect measure, right? We have been very low on this metric before, and still afterwards we crashed down in the Bitcoin price, right? This is a level of around 7K US, and we then afterwards still had a 50% decline, whereas the number of active entities was already pretty low. So by no means is this a perfect measure, but still, at least if we want to exit, we can take this metric to find potential points for selling. Right now is no time for selling, right? We want to see more activity first happening. Now, a pretty similar but slightly different metric is to look at the number of transactions. So instead of looking at the wallets of the entities, we're now looking at the activity. And this is increasing a bit less steeply, right? So the number of entities is increasing quicker than the number of transactions, which I think is a good thing actually. What this tells me is that there's more and more people in the market, but those additional people, they don't speculate actively. There's more and more long-term holders in the Bitcoin market. And that's what you want, right? You want rather few transactions, but a lot of people adopting this, at least if you believe in the store of value narrative, right? There's also a second effect happening here. These are the transactions directly on the blockchain, and there are transactions that are now happening on the Lightning Network. There are bundled transactions. So there is technology advancements that take some load off of the blockchain. The current short-term momentum is that we are potentially coming out of this very passive, depressed time. Now, this is another expression for this technological advancement of Bitcoin, whereas Bitcoin is now able to handle the workload, right? This is pretty different to the chart in Ethereum. So here we see the total transaction fees. And during the bull run of 2017, when there was so much speculation around Bitcoin, the fees, they really shot really high. And then the interest declined, and so the fees did as well. Then we had our secondary short-term rally here in 2019 after the crypto crypto winter. And currently the transaction fees are really, really low. They have never been that low actually in this grand scheme of things. And that's pretty much the exact opposite of what we can see in Ethereum. In Ethereum nowadays, doing a simple swap costs like $50 or so. Gas fees are really, really high. The complexity of the applications on the Ethereum network increases, right? Handling DeFi applications, handling borrowing and lending, staking and liquidity providing and all of that. This is pretty complex and the development of Ethereum cannot catch up. Transferring money on the Bitcoin blockchain nowadays is even cheaper than it has been in the past. A very different development to Ethereum, which is probably also the reason why the market cap of Ethereum isn't growing as quickly as in Ethereum has more and more competition. There are the layer 1 competitors, Avalanche, Solana, Cardano, Phantom, etc. And they all take away total value locked from Ethereum. But there's no such thing as a viable competitor to Bitcoin. Bitcoin is still the most decentralized, the most failure-safe blockchain that's really a store of value. And the increased adoption, the increased number of active entities does not seem to have any kind of bad impact on the transaction cost. Now we all want to time those tops and bottoms in Bitcoin, right? And it's pretty hard to do this perfectly, but we can use data to somehow get a gauge of where we currently are in the cycle. And one thing to look at that might be of interest is how are currently the people actually in profit or in loss. So we can look here at the percent of supply in profit or at the percent of addresses in profit. So supply being in blue, addresses being in purple. And we can see this is a very, very long-term chart, right? Starting in 2011. Over the very long term, people tend to be more and more in profit because once you've lived through one of those cycles, you in the end decide, okay, let's just hold Bitcoin over the long term. So the average holding duration of Bitcoin increases and with it, the average percentage of people being in profits. And so using this top metric over here, right? So this is 100%. Using the top metric to time market tops isn't that useful, right? We would have sold already over here, but we still saw this massive run. But looking at the bottoms, we see a bit of a more helpful gauge. So we have bottomed over here, we have bottomed over here. Currently, we are not at the absolute bottom, right? We could still fall further. But we did bounce off this primary support a few times. So what does this tell us? We have to still be prepared for further losses potentially. It doesn't have to happen, right? But we are not yet historically at crazy lows. We are not yet as depressed as we have been here in the final capitulation phase of 2018 or as negative as in the Corona crash. So we have to be ready for both scenarios. We are comparatively low, so being invested does make sense, but it also makes sense to have some money on the sidelines to take advantage of potential further drops that could happen. These kind of drops did happen in the past several times. Now there are way more charts to show here. If you so far enjoy this video, don't forget to subscribe because I do publish videos regularly. A like, of course, would be appreciated as well. Thank you. Now let's look at those times where people are really in losses, where there's a lot of capitulation happening. This starts in 2017 again. We see here the crypto winter and we see the big final capitulation of 2018, where we went from those 7K to those 3.5K. And we can see a similar kind of movement during the Corona crash and then here in the summer depression of last year. Currently, not a lot of people are in losses or they haven't realized those losses. So we can tell that people aren't really giving up on Bitcoin. People simply wait for the next rally. People continue to accumulate, continue to hold over the long term. And so far, nothing looks scary. People tend to sell when there are very drastic movements, right? Like look at this movement in 2018. We had our crash, our 50% drop, and only at the end of that drop, people started to really panic sell. The same is true here for the Corona crash. We have already crashed, right? And where do we see the exact spike here where people realized the losses? It was after the crash. It was several days after the crash. This is where the panic started. This is where then the weak hands move their money to the strong hands that are willing to buy the dip. And currently we are in no such movement. We have come down quite a bit, but people are not panicking at all. I would imagine we could see a similar move if we suddenly were to crash, right? If Bitcoin suddenly crashes to say 28K within a few days, then you'd probably see something similar. And that would definitely be a time to buy in again. With a very slow bleed like this, right? Where we slowly bleed from 60K to 30K, people don't really panic that much. People simply stay invested. Only when we crash really, really quickly, this is when people get scared. This is when then the real turnarounds tend to happen. So does that mean we can't go up from here because we haven't yet crashed that much? Not necessarily, right? But it does mean if such a crash was to come, right? If we would see a real massive crash, then I do think that would be a great buying opportunity. I do think buying into massive fear tends to be rewarded in Bitcoin. Now we see a pretty similar scenario here for the realized profit. So again, when this spikes really, really high, we also tend to be pretty high on the price. We did have a similar spike at the beginning of 2021. And since then, even with a new all-time high, right, that we got in Q3 of last year, we didn't see a lot of realization of that profit. Not a lot of profit taking happened here, thus indicating that this could potentially not be the top. So what you want to do is you want to buy whenever this is relatively low and you want to sell whenever this is relatively high. Currently, we are relatively low, indicating would make sense to rather buy than sell. Now let's jump into one thing that has been requested by the premium members. So at thebitcoinstrategy.com, you can sign up for that. You'll get access to a premium membership chat. And in here, one member asked for a backtest of the super trend indicator. So this is an indicator trying to figure out, are we currently in a bull market or in a bear market? It tends to work relatively well, right? By the optics of it. So we would have been bearish over here. We would have been bullish over here. Right now, we are rather bearish. To get this kind of indicator, you simply go to tradingview.com. You then click on this icon over here and you simply enter super trend and click this button. Then you get the indicator plotted on the chart. Now, does it make sense to be cautious now because we are bearish according to this indicator? Does this indicator actually work well? In order to find that out, I've done a calculation using Microsoft Excel, just a simple backtest. So the data I'm using here, it starts on the 18th of July, 2010. So I'm looking at the BLX and the strategy is very straightforward, right? Whenever we turn bearish, we would be betting on falling prices. Whenever we turn bullish, we would be betting on rising prices. And without further ado, let's jump into the result. So in white, we've got the Bitcoin price, and in orange, we've got the return of that strategy. So this is on a linear scale here. This is on a logarithmic scale. So it does look like trading according to the super trend indicator underperforms just buying and holding Bitcoin. So it's not necessarily the best indicator that we can think of. That being said, not all is gloomy here, right? The indicator underperformed in the first half of Bitcoin's history, but in the recent past, it was pretty much keeping pace with Bitcoin while having less volatility, right? Look at the top to the bottom here. This was more than an 80% decline, the crypto winter in 2018 for Bitcoin. We didn't see a similar decline following that strategy. So even though I wouldn't actively trade according to this, it still tends to somewhat perform equally well as buying and holding, which is not necessarily the worst, given that sometimes we bet here on falling prices. And Bitcoin did increase quite massively in value in this period of time. So even though I wouldn't use this for trading, I still think it might make sense to sometimes look at this. There is some value here. The reason why the chart here looks way more promising than the actual results is actually the representation of that chart might be somewhat misleading. So this looks like we would have bet on a really nice downtrend over here. We would have bet on a really nice rally over here, and we would always get pretty good results, right? But the problem is, once you really zoom into this, right, we would actually not have made money here. So let's look exactly at when this turns around. We would have gone bearish on the 10th of September, so for this price, and then we would have gone bullish again on the 5th of October, so for this price here. So actually we would have bet on falling prices during a rising period. It looks like the indicator works well because it starts its drawing way below the price and it stops it at the price, and the same is true the other way around, right? So it does look like we make money in this trade, but actually we don't. When we look at the actual prices, we lost money in this example. So there is some kind of lag happening here. There's some kind of misrepresentation happening here. And that's why on the chart, this looks better than it actually is in practice. Now I've done quite a few backtests, right? On quite a few different technical indicators. So there's a whole TA Academy where this is explained, the different moving averages, the MACD, correlation, etc. and how to build such backtests. There's even dedicated videos on how to create such a sheet, or you can download those different Excel sheets. For example, also the one here for the super trend indicator for Bitcoin directly in the statistics library. There's also an alerts channel that shows us when do different assets go above or below their most important moving averages. And last but not least, we've got daily market updates on where currently Bitcoin, Ethereum, and the altcoins are headed. So more information is over here. TheBitcoinStrategy.com is the address. Link is in the video description. So you can sign up either monthly for $49 per month, or you can go with yearly where you do get 2 months for free. But as said, I will continue to publish free content here on the YouTube channel, so don't forget to subscribe. And if you're wondering about last week's Bitcoin update, what did the on-chain data say at that point in time, don't forget this video over here. There's quite a lot of value over there as well. So see you in that video, and thanks for watching this one. Bye-bye.